So Akash, let's look at your deal.
Let's
All
go.
right. You sent a DM, right? So we have this property at 317 Campus Drive, Dallas, Texas, 75217. So you have a $17,000 back payment, and that means that they have arrears. So it's a property. These people own the property, but they're behind on their mortgage payment, $17,000. They haven't been paying their mortgage for, it looks to be probably, I don't know, 12 months, 15 months. They have 1100 to 1200 PITI. What does PITI mean? Skylar, what does PITI mean?
Principal, interest, taxes, and insurance.
What does that mean, though?
Well, what do you mean? Was that
I'm
just
putting that on the spot.
principal, interest, tax, insurance?
What does
It
PI
means
mean?
what is your? It's basically your negative costs. It's your how much you're going to be paying in principal, how much you're going to be paying in interest on your mortgage, and how much your annual taxes and insurance are going to be. It's
All
your
right, great
negative.
job. Great job. I taught you so well, my friend. I love it. Okay, let's jump back to these DMs. So yeah, they have a monthly payment of about $1,200. It's a beautiful 3.125% VA loan. I mean, that's an incredible loan. It's VA, a little bit harder to take over subject to, but Akash is off answering or asking the fundamental question: how much should we pay? And he says the rent's about $1,600. So let's check out this property here. All right, everybody, let's run the numbers on this deal. Let me flip back over to the Discord and let's look at it. So, Akash, I already forgot the address.
317 Campus Drive.
What was 317?
317 Campus Drive.
Campus Drive. All right, so is it next to a campus? Where is this place? So this property is nowhere near a college campus.
It's Pleasant Grove.
Yeah, I don't know a college campus around there. But anyways, so Dallas, South Dallas, it's our favorite area. It's our absolute favorite area. Now the property looks to be fixed up, but let's check it out. We wholesale a lot of deals in South Dallas, probably way too many deals. So this property looks really nice. It looks like it was fixed up and sold in 721. So someone flipped it in the pandemic days and then resold it. But now I guess the person who bought it is behind on their mortgage payments. So we're looking to see, hey, we don't want to pay for this property cash. We actually want to just take over their loan payments because it's a 3.125% VA loan or whatever the heck that was, 3% loan. That's incredible. So guys, I'm going to shoot this to you. I'm going to put one of you on the spot. How would we go about seeing how much we should pay for this property? What's the first thing we should do? Does anyone know? Skylar, you always have the answer. Does anyone else have an answer? We have for a house, it's easy. For like a cash house, it's easy. We go and see what the other houses are selling for. Or for a fixer-upper, a house that's in terrible condition, we go to see what other houses are selling for that have been fixed up, and then we offer like 70% of that minus repairs. We know that. That's easy. We talk about that all the time. But if we have a subject to house, how much should we pay? It's actually a loaded question. There really is no right answer. So I want to hear what Skylar's answer is, but there actually is no right answer. So Skylar, what do you think?
Well, there's two different parts of doing a subject to property. There's, taking over the payments, paying the debt servicing costs, and there's also giving back the cash for equity. So they've already built up a certain amount of sustainable equity in the property that they've paid for. Now you are paying subject to the existing mortgage and the debt they still owe on that property. So you have to figure out, first of all, how much that property's full value is to pay them back for their equity if they want that. If they're wanting basically a cash scenario where you give a cash down payment and then you just pay subject to, or if they're just willing to let you take over their monthly payments, then you just need to figure out, well, in both circumstances, you need to figure out what other properties just like this one are renting for, how much you are going to be able to get from rent, and then subtract that by your PITI and see if it's profitable.
Yeah, so exactly. There's probably two different ways to go about it. You can do more the Pace Morby way or more of other investors' way. Like a Pace Morby, what he cares about is cash flow. He's looking at this more like a business, how you would look at a multifamily property. So Akash sent me numbers. We'll check them in a second. But if rent is $1,600 and our PITI, our monthly expenses are $1,200, there's $400 there. So that $400, that's cash flow more or less. And we're trying to see I can offer my offer is based off of how much cash flow I'm getting. Other people are just going to say, "Hey, these properties are selling for this. I want to buy it for this." So let's quickly check this out for you, Akash. So the first thing I want to do, the information we don't have. So this is the information I have from Akash. I have the address, awesome. But when it comes to the loan payment, I have the arrears, I have the monthly payments, I have the rate, but I'm missing something here. I'm missing something super important. Do any of you know what I'm missing here? You have to have this to know what you can offer on a sub 2 property.
Loan balance.
There you go. How much of the loan are we taking over? If there's only $1 left on the mortgage, well, then I have to give these people a lot of cash, right? So that's the most important thing is that loan balance. So Akash, do you know the loan balance? If not, I'm looking it up right now.
Yeah, 192,000.
Oh, okay, easy. So yeah, I'm just gonna go to their tax records, and they got a $200,000 mortgage, but Akash is saying that it's 192,000 because they've been making their payments for a little bit. Then they stopped paying. So it started at 200, now they're down to 192. All right, so we got some information here. So let me go to my favorite journal app right here, and let me draw this out for you guys, and we'll write up a quick offer. Akash, go get this deal, buddy. Looks like a nice house. Oh God, I'm so sorry. What the heck's going on with my screen? You can see all my notes. 1 second. There you go. Okay, so we have a house. We don't know the price of the house. We don't know what they want. Do you know what they want, Akash? Do you have a rough area of what they want?
Yeah, the loan balance is 192 and 17,000 is arrears.
Yep.
It comes to 209 and they are asking 219. So 10,000 above the.
And then they're asking 209,000 as a purchase price.
219, 218,900. So
okay.
200.
So 219,000 is the purchase price. Okay. So what we would do here is we would say, okay, this.
Don't jump up. Go around. We had this conversation last time.
Hold on. Let me mute. If you want to be unmuted later, lifelong daydreamer, let me know. Okay, I had this problem. Okay, there we go. We're back. Okay, so I'm gonna have to put someone in the chat who's gonna be my muter. We're gonna have to do that next time. But anyways, this here is equal to 209,000. So what we're trying to first figure out is, hey, what's that loan balance? And their loan balance is 209,000. They have, $192,000 in interest and principal they have to pay. So this is their PI. They're paying that over probably 30 years. But then now they have $17,000 in missed payments. And you're probably like, wait, but 209,000 is more than their original $200,000 mortgage. Yes, welcome to the world of taxes and insurance, a world where, especially in Texas, kills you. You pay so much in taxes and insurance. Just for fun here, I'm going to show you guys what they're paying in taxes every single month. This may blow your mind if you're not in Texas. Taxes here are ridiculous. So their property's assessed at 180. And that means that they are paying. If someone sees
Around 270 per month.
Yeah, so they're paying $4,000 a year in taxes, which is crazy. You have a cheap house and you have to pay $4,000 a year in taxes. That's insane. So what's that? It's a little. What'd you say? 370? You said, or 3 something?
270.
Yeah, it's probably gonna be a little bit more. So they have probably a homestead exemption. So here's something actually really important that I want to stress, guys. Let's say you're buying a property subject to, or even seller finance, whatever. When you buy a property in a lot of states, your taxes are going to be reassessed higher. So that PITI that Akash sent me, that $1,100, $1,200, it's probably going to bump up, maybe $100, because when you buy those taxes, it's going to get reassessed usually at the purchase price, and that's going to cause your taxes to go up. So if we're buying it at 219,000, now you're going to get taxed on 219,000, not 180 something thousand. But it gets worse. Most people in Texas have fat homestead exemptions. And this guy, guess what he is? We're taking this a step further. This is what YouTube needs right now. Does anybody know what this person is? This person.
Veteran.
What did you say?
Veteran.
Veteran. Dude, Akash is on it. He's a veteran. And what does that mean if you're a veteran? You get an even bigger homestead exemption or tax exemption on your property. Some veterans in Texas, where I think we're the only state that does this, we have 100% VA exemptions for taxes. So if you're a veteran and you have 100% disability, Hold on, my dad's calling. Let me tell him I'll call him back. That means you can get a veteran exemption. You'll get a fat tax break. So I think it's only for disabled veterans based off of how disabled you are. And if you're fully disabled per the government, that doesn't actually mean you can't walk. It's just what they signify as fully disabled. You won't pay taxes. So it's important that you know what their situation is, because when you rebuy that property, you might be surprised and your taxes might jump. So, for example, some of my properties that I own, I'm paying just for a regular house like I'm in right now. I don't live in like some grand mansion. $10,000 a year in taxes per property. Insane numbers. But if this house was owned by a veteran who was fully disabled, you would be looking at this deal like, wow, his monthly payments are only like $1,500. Well, get ready, because that's about to jump to $2,500. So, and then your average property is owned by a homeowner and they have homestead exemption. So, long story short, my big rant here is always bump up those taxes, and you need a lot more spread. So, if you're looking at a sub 2 deal and has $200 in cash flow, no, it doesn't, because you're going to rebuy that. That $200 is gone with taxes, and then you still have maintenance and capital expenditures and all this junk. So we just want to know that. But let's go back to our drawing board here. 209,000, and then Akash says that the seller wants $10,000. Well, that made our life a lot easier, right? So that means that the purchase price is 219. So that means the sellers has $10,000. That doesn't actually sound that bad to me. So where are we at now? We know that what's the rent? You said, Akash? Did you say 1,600?
Yeah.
Now, how do we go ahead and calculate rent? Well, we would comp rent. It's interesting to see what Zillow gives for the rents estimate. I've noticed their estimate for rent's actually pretty accurate. What was it? 317 Campus Drive? What does it say the rent's estimate is? It's saying Zestimate's 208. Interesting. I don't go. What'd you say?
1592 as per Zillow.
Okay, yeah, 1612. It's gonna change every day. I could run my own Zestimate and see. It doesn't sound too far off. This is a small house. It's only 1,000 square feet. I don't know this area perfectly, but we'll use that for now, just for the sake of time. But I don't know exactly. I'd have to run some comps. And how would we do comps? We do it the exact same way, guys. We would take our software. I'm going to use MLS. You would use PropStream, Privy, PropWire, and you would draw a big circle around it. And then, here, actually, I don't like talking. I like showing. We'll do this real quick. This is good. We're here. We have time. Do this. Choose probably half a mile radius. Results. And then what you would do. Map. So here, this would show you what properties sold for, but you would do the same thing and look for what properties are renting for, and that would tell you. With MLS here, you know what? You guys don't have MLS, so I don't want to flex on you guys. We'll do it with the free software. We'll do it with Zillow. So if, let's say you wanted to do it with Zillow, I would drop the address in here. It's a bit of a pain because you sort of have to remember where it is. So it's like, all right, this property is here. The Balch Spring, this freeway. Okay, and it's right in here. I just try to sort of remember that. I'm sure that maybe there's a better way of doing it, but that's one way. Okay, so if that was a freeway, that was a thing. It's right in here. Okay, cool. And then you just remove this boundary. Then you would go here. Instead of for sale, you go to for rent. And then you look for similar homes better for rent. Oh, sorry, I have a filter on. Reset all filters. There you go. So you can just start to see what properties are renting for. Okay, so this one's renting for 2,200. So is ours worth 2,100? Well, no, because this property's bigger and it has another bathroom and it's pretty nice inside. What's the condition of this property inside, Akash?
It's nice. It's only 2 years before renovated.
Okay, yeah, that's what I thought. See, here's one perfect example: 3-bedroom, 1 bath, 900 square feet. It's renting for 1,700. And so, we'll run with 1,600. But if you have a nice yard and it's in a nice little area, maybe you can push a little bit higher. So we'll use 1,600 for now, and that's how you would run those comps. Rent comps are really easy to run. Go ahead, Skyler.
I'm taking a look at MLS.
Yeah.
And there is a property. It's 1,000 square feet. It's a 3-2. And it's not fully rehabbed like ours, but it's decent enough, and it's about 1,500. So I would say you're under that. I wouldn't say 6.
Okay, then let's be conservative and let's just say 1,500. just for sake of the video. But yeah, that's why it's important to spend the time to run the numbers. Zestimate will be wrong. So then we know that our PITI, and I'm going to put PITI in quotation marks because that will change, is what did we say? About 1,200? I would just
Yes.
probably add $200 just to be sure. I always like to be conservative. So we have about $100 in quote unquote cash flow. So for $100 in quote unquote cash flow, we're buying this house not really for $220,000. We're actually only paying $10,000, which is pretty sick, right? The sellers are okay with $10,000 to buy this property. So then you sort of just got to imagine that you're breaking even. We can all agree this is a break even deal. After you have vacancies and after you have repairs and stuff, you may even lose some money on this property, but it's about a break even deal. And you're paying $10,000 to break even. Go ahead.
We are paying 10,000 or we are paying 27 because arrears.
That's a great point. Yeah, you're 100% right. We're paying 27,000. So these are arrears. I completely forgot about that. So you have to pay arrears. Arrears are back payments. You can't. Sure, some people can modify a loan. Some people can do some crazy stuff, but you got to pay that money cash. I mean, you're behind on those payments. The bank wants their money. So, excuse me, you got to pay arrears. So this is actually what gets us into an entry fee conversation. What is entry fee? What's how much money it costs to get into a deal? For a cash deal, your entry fee is just the purchase price, plus maybe closing costs and stuff because you're buying a property cash. Here we're buying a mortgage. To buy a mortgage, we have to pay arrears. Okay. We got to pay the seller because the seller said they want $10,000. So what else do we have to pay? Any other fees that we have to pay for entry fee, guys? Is 27,000 our total entry fee?
Closing
Any
cost.
closing costs?
Closing costs is a good one. Repairs, if there's basic repairs, I like to add that. That's a hot take, I guess. Some people say don't add that. It's up to the person. I mean, if it's repairs to make the property rentable, I add that because I'm like, well, then if the property's not rentable, to me, it's a useless asset. So I need to add repairs. Closing costs is a good one. If you're then I like to add assignment fee because if I'm going to be wholesaling this deal, then that's what has to go into this. So Akash wants to wholesale this deal. What do you want to get for an assignment fee?
Maybe 10,000.
Maybe 10,000. All right. So now we're at 27 here. Closing cost is probably $5,000. I don't know. And then Akash wants 10. So now we are at $42,000. Now, what happened to that beautiful $10,000 for a house? Nope. Now we're at 42,000. I'll have the turns tabled. So you're paying $42,000 to buy a break-even house. Is that good? Well, your rent is paying off a house, so after 30 years, you'll have a free house. That's not bad. I'll pay $42,000 to have a free house in 30 years. Maybe. Right? So you need to weigh the numbers. So I don't know. Like, is this a good deal? I think this is teetering on a good deal. The problem with this deal is the arrears are killing it because those arrears are expensive and that the seller wants an extra 10. So where would I start? I would be like, hey, seller, I don't know if I can do 10. You're $17,000 behind on your mortgage payments. This is what Tony's going to be great at. He pretty much never pays the seller on these deals because he finds them like the day before they go into foreclosure. And he's their last solution. And if this guy doesn't get a buyer, he's going to foreclose and he's going to ruin his credit. His life's going to be miserable. It's going to be a bad life, right? So you need to ask the question: does he really deserve that 10,000? Maybe, but is that true equity? What's the value of this home? And then I get more into the value of homes. Pace doesn't really care about what he pays for a property for the most part because he's buying mortgages. He's buying equity. He's buying these 3% rates, but he still looks. I promise you, he still looks. So the seller wants. What does the seller want? $219,000 for the house. What do you guys think this house is worth? Do we know? Skylar, do you know? He wasn't looking. I don't know, right? So we'd have to run some comps, right? So I mean, we'd have to spend some time to see, what it's worth.
I'll run the comps real quick.
I think it's probably worth about maybe 2 or 180. Like I don't know. So we're overpaying for the house, and when we buy sub 2 houses, it's okay to overpay. So this property sold for 260, which is surprising. It seems way too expensive. Is it on a big lot? I don't know why the heck this property sold for so much. Damn, that seems way too much.
Oh, you're talking about the 261.
Yeah, but yeah, I'll let Skylar run the numbers in the meantime. But so then we gotta just determine what the property's worth. If the property's worth, 219, well then you know what? Then this is a great deal in my opinion. I would score it about like an 8 on 10. Um, it's not a bad deal. But if the property's only worth like 200 grand, I don't know how much I love this deal because I'm overpaying $20,000. I'm overpaying 10%. So now it gets into the question of what it's worth. So what can we do, Akash, on this deal? Well, the first thing I like to do is calculate. One thing you want to do is calculate your cash on cash return. Investors are going to want to see that. And what does that mean? That means you take your cash flow, you multiply it by 12.
I'd probably say it's like 225, 230.
Is that current value?
Yeah.
Oh, okay. Well, then maybe it's a good deal. So you multiply that by 12, and then you divide that by your entry fee. Well, here it's a little tough because we're about break even. So 0 times anything is 0. But we can just say
No cash flow.
maybe we make no cash flow. But let's just say for the sake of marketing, you would probably market the current PITI and situations. So maybe you would say 3,600 divided by the entry fee, which is no one's as conservative as me, especially when you're wholesaling. And between us, you're not going to be like super conservative. You're going to let the investor figure that out for themselves. They're smart enough to know that the deal is not as good as you make it, and then you divide that by 42,000. So I don't have let me do my calculator real quick, and that's how you would calculate your cash on cash return. The cash on cash return is super important because as an investor, you want to weigh. What did you say?
8.57%.
Okay, well that's good. So why is this number important? And this is going to get into investing, and I love this because we're leading into investing about 8%. If I'm in the stock market, my average returns in the stock market are 7% historically. If I'm putting my money into bonds right now, I'm getting about 5%. So you're telling me I can get 8% returns plus appreciation, which is awesome. I don't know how to spell that. And appreciation, the average appreciation is 5%. So now I'm not getting 8% returns. I'm actually really getting 13% returns. That's not bad. And how did I get those returns? Without having to use, well, barely any cash. I could have, not that much cash. I didn't have to use, just like Pace More, he always screams, no cash, no credentials, and no credit, right? I'm leveraging other people's mortgages. So, not a terrible deal. What I would try to do is see if you can maybe get the seller to adjust a little bit on this. If they can come down a little bit on their $10,000 that they want cash, if you can maybe get that down to 5, I think that would be ideal. And I think you got a pretty good deal there. I think you should hopefully be able to find a buyer. It's a great area. A lot of people are interested in that area, and it looks like a pretty good deal for somebody. And we didn't even calculate something else because we're not going to talk about that today, but that's a genius thing too. Is I heard Campus Drive. Could this be student housing? Probably too small of a property. But could this be a short-term rental? Well, no, because Dallas has banned short-term rentals. But could this be traveling nurse housing? Could this be something else? Or let's wrap this property. This could be a great wrap. Skylar, you're muted, by the way. This could be such a great wrap. So if you guys want to talk about wraps in a second, we can talk about that. But I could see this being a good wrap, especially if there's a little bit of equity in there. You could wrap this and make some good money. So Akash, I would probably try to lock that up. Looks like a good deal to me. And then market it as a break-even long-term rental in Texas, which does not exist. That's actually great for most people. So you're paying, $40-something thousand dollars for a turnkey break-even rental. And then say, hey, if you want to wrap this, you could probably make a few $100s a month as a wrap. If you guys want to talk about wraps, we can get into that subject. But that's what I would probably do with this property.